Trading here in Europe for this Tuesday. Here are your headlines. Stocks in Asia and European futures slip as investors look ahead to key inflation data and the ECB meeting later this week. Delivering bad news, Amazon will be covered by the G7 tax deal despite its thin margins. The new rules could target its more profitable cloud computing business. And a game changer for Alzheimer's drugs. US regulators give the nod to Biogen's controversial therapy, the first new Alzheimer's drug in 20 years. Good morning, everybody. Welcome back to the European Market Open. Let's have a look at where we are on European equity market futures. And we had seen a little bit of deterioration heading into the start of the European trading day, but actually things look fairly flat, don't they? So expectations for not moving all that far. This on the back, as we said in our headlines, of some weakness in Asia, but again, not such a big move, down by 0.2% on the MSCI Asia Pacific at this stage. Let's see where these European equity markets open up, and we are expecting a little bit of a sideways move perhaps, but the FTSE 100 fairly flat this morning. That is the first market to open, and the Stoxx 600 now registering fairly flat this morning. This after a strong performance in yesterday's session, though. We saw European equity markets closing at a record, the Stoxx 600 closing at a record, up by 14% in 2021, only making gains of 5.6% since the start of April. So maybe those gains becoming a little harder to come by as we go through the year, but still the path for this year so far in aggregate has been a positive one. So European equity markets opening fairly flat this morning. Then the CAC 40 now open and that's flat. The DAX open flat. The IBEX a little bit of downside, but essentially we're flat across these European equity markets after we hit another record closing high in yesterday's session. US futures look a little mixed as investors count down to the latest US inflation reading on Thursday, one of the last major data points before the Fed's meeting that will take place next week. We're joined now by Eric Norland, senior economist at CME Group. Eric, very nice to speak to you. So we'll come to your sort of more bread and butter economic views, I suppose, in just a moment. But just in terms of risk appetite and the way you think that financial conditions have a set up at this point, we sit here with global stocks not far from record levels. Does that feel like the right place? Does that feel from CME, from the CME Group's perspective, is that sustainable?
You know, it's always a difficult question to answer, but what I think is really fascinating about the stock market's pricing right now is that on the one hand, as you rightly point out, stocks are very close to record highs on many indices. So you could look at that and say, well, investors therefore are extremely optimistic. On the other hand, you could also look at annual dividend futures, which essentially price dividends out to the year 2031. And what those futures show is that investors actually expect very little dividend growth over the coming decade. And in fact, after inflation, if you correct them for, say, the break-even inflation spreads, investors actually think that in inflation-adjusted terms, dividends are going to fall by about 15% between now and the end of the decade. And so what it seems to me is that the equity market is at a record high or close to record highs really for one major reason, and that's because long-term interest rates remain very, very low. So the market's pricing seems predicated on the assumption that inflation is transitory and that long-term rates stay low.
Yes, and so how much do you see threats to that view, Eric, when it comes to inflation expectations and what that might do to that low interest rate environment if the inflation story builds and builds sustainably and is more than just transient? Is that a threat to that view?
I think it is a potential threat, yes. And for the moment, inflation expectations do remain relatively stable. If you look at the break-even spreads, they kind of peaked out recently at around 2.45% average inflation over the next 10 years. And since then, they've been coming down a tiny bit. But there is always a possibility that if the inflation resurgence that we've seen in recent months proves to be not transitory, we could see a rise in long-term bond yields, and that could potentially undermine the valuation of the equity market.
And in terms of where you see, you've also, ahead of our conversation, you've been looking at the links between commodity prices and where we are on stock markets, Eric. And I wonder your thoughts on this story. I know that copper prices and the S&P 500 is something that you've been looking at, the extent to which they've tracked each other, and whether that will continue to be the case, because the copper price, Dr. Copper, often seen as such a barometer of global growth, and in recent decades, a barometer perhaps of Chinese and emerging markets growth.
Yes, that's right. And copper really seems to outperform equities during periods like the 1970s, for example, when we had really strong growth in emerging market countries. It really outperformed equities again between about the year 2000 and 2011, when China really came onto the international scene in a big, big way. And even though equities have done very well in the last 12 months, copper has actually done even better than equities have. So I think the question is that just sort of a temporary facet of the boom in demand for manufactured goods that we've seen, or is this going to become a more permanent feature? By contrast, equities tend to do better during periods of disinflation, like during the 1980s and 1990s, or during the 2010s, in which inflation rates remain very low and stable. So I think the key question for the equity markets really remains, does inflation rise?
Okay, and we'll get to that conversation next. Eric Norland, thanks very much. Eric Norland from CME Group. Stay with us here on the program. Coming up, big names for Bloomberg's Deals Summit. The theme is the Roaring Twenties. Deal makers, CEOs, investors, and insiders share their insight at a virtual event. It kicks off 2 p.m. London time. Plenty of big names in attendance. Coming up on this program, central bank alignment. The ECB is set to keep its stimulus going, mirroring counterparts in the United States. We discuss monetary policy in Europe next. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Welcome back to the European Market Open. 8 minutes into our European equity trading session, and things fairly flat really across European equity markets. A little bit of weakness over on the DAX, but nothing to get too excited about perhaps. Let's get a Bloomberg Business Flash. Top corporate stories we're covering today here at Bloomberg. Here's Juliet Sarli.
And global policymakers are crafting their international tax plan to make sure Amazon is included, even though the tech giant's profit margin is below the 10% proposed threshold that would give other countries rights to collect revenue. Amazon has an estimated 7.1% global operating margin this year, and Bloomberg understands one scenario involves targeting individual operations like Amazon's more profitable cloud computing unit rather than the entire company. US regulators have approved Biogen's Alzheimer's therapy, a landmark decision that could dramatically change treatment for the debilitating brain condition. The company will need to do more research to establish benefits for the drug to stay on the market, with some scientists skeptical about its mixed record in clinical trials. It is the first FDA-approved treatment for Alzheimer's in nearly 20 years and will cost $56,000 a year. Bloomberg has learned that SoftBank is seeking a loan of some $7.5 billion tied to its planned sale of chipmaker ARM to NVIDIA. The proceeds will provide investment funds for SoftBank's Vision Fund, with collateral provided by the ARM disposal. Mizuho Bank is coordinating the deal. KKR's Independence Energy and Contango Oil and Gas are said to be near an agreement to combine in an all-stock deal that could value the new business at about $5.5 billion, including debt. The two are doubling down on investing in energy exploration and production, as many in the sector seek to recover from years of poor returns. We understand the company will operate under a new name and ticker symbol and seek a listing in New York. And that is your Bloomberg Business Flash. Anna.
Juliet, thank you. Juliet Sarli in Singapore for us. Now, the ECB looks set to keep its stimulus flowing in the region when policymakers meet this week. That's in part thanks to the Fed's stance on the economic recovery in the US. With Fed officials in no hurry to taper, there's perhaps little pressure for the ECB to withdraw early, which is helpful as the European economy is further behind the US and could do without the added turbulence of global policy shifts. Eric Norland from CME Group is still with us. Eric, is it useful for the ECB to have a little bit of that cover coming through from the Fed, in the sense that if the Fed is not in any hurry to change the narrative, then the ECB, which arguably is a few months behind, certainly won't be? What is the gap between the recovery in the US and the Eurozone right now?
Well, I think there is definitely a gap, and I think the gap probably relates more to fiscal policy than to monetary policy. Monetary conditions in both the US and Europe are both very, very easy, but the United States has done a lot more to ease fiscal policy than the Europeans have. The Europeans have done a lot. They're still running big budget deficits, but on average, their budget deficits are maybe a little bit more than half the size of what we've seen in the US. The US did the second huge round of stimulus in March, and we haven't really seen anything comparable to that in Europe. So that's probably explains in part the difference between the US and Europe. And then, of course, you have some differences in vaccination rates, too. The European vaccination campaign is a few months behind the US, but it's catching up pretty rapidly, which is going to be great news for the Europeans going forward. When it comes to the two central banks, so I don't think that is necessarily the case that the two couldn't diverge on monetary policy. I mean, if the U.S. economy really is recovering more quickly, it's possible the Fed could move before the ECB, and that can actually be beneficial to the Europeans, as it might strengthen the dollar and weaken the euro, which could be helpful to Europe's recovery.
Yeah, and what does that, what kind of priority should the strength of the euro be for the ECB then, Eric? You mentioned there that, yes, if the Fed moved first, that might strengthen the dollar, weaken the euro, but some of the drift most recently in the euro dollar seems to have been to the upside. We're at 121.78, fairly flat this morning. But what kind of levels really worry the ECB, do you think, there?
Yeah, I think the ECB would tell you that they don't really target the currency exchange rate, but the economy probably isn't as sensitive to the currency exchange rate as people think. For example, if the euro were to go up, say, 10% versus the US dollar and say go up to the 130s, most likely that would probably shave maybe at most 0.5% off of Europe's growth rate and maybe a few 0.1% off of inflation. But the thing is, European inflation is still a lot lower than in the US, and their recovery is a bit behind. So generally speaking, having a stronger currency for Europe isn't really desirable. And having a weaker currency might be sort of helpful to them at the margin.
What are you expecting when it comes to the US and the Fed and the taper that is expected but uncertain in its timing, Eric, and the extent to which we can avoid any kind of taper tantrum? You've made the point that maybe the curve has not steepened through this recovery as it would have done in other recoveries because of the stance being taken by the Fed. So as we start to see talk of tapering heating up through the summer or later than the summer, whenever you think that will happen, what is going to be the impact then, do you think, on markets?
I think it's really hard to say. If you look back to the previous tapering in 2013, when the Federal Reserve announced that they would begin the process of reducing their buying programs, you saw 10-year yields rise from 1.4% to over 3%. That's a pretty huge move. I mean, more than doubled in terms of yield. So I think you should be prepared for the potential of a pretty strong market reaction if the Federal Reserve pulls back, especially if they wind up pulling back earlier than investors currently think that they're going to do.
Yeah, indeed. And where do you see inflation coming through then in the United States, Eric? Of course, that is the more immediate focus perhaps for investors, given we've got the inflation number out tomorrow. How would you expect that to be navigated?
Well, so I think that maybe the good news on inflation, if you look at it as a year-on-year measure, is that the month of May will be the last month in which we're rolling off a negative number from last year. And then after that point, the points of comparison become positive again. So we'll start to roll off some pretty strong inflation data as we go over the summer. So the year-on-year inflation rates might begin to stabilize. Maybe they'll even peak this month and then begin to stabilize or maybe even decline over the next 12 months. But that really depends crucially on what the incoming numbers are for inflation. And that's what I think we don't really have a handle on. And that's what those incoming numbers are what's going to tell us, is going to give us an indication as to whether or not these price rises are transitory or not.
And sticking with the Fed, what is the significance for you, Eric, of the role the Fed has played in corporate debt markets? Of course, the Fed playing an important role in stabilizing them at the height of the pandemic. And in recent weeks, we've heard that they plan to roll off some of their exposure there, to sell some of the debt they've accumulated on the corporate debt front. Many suggest it's a small player, so it's not that significant. But does it have any sort of symbolic meaning to you?
It may very well. I mean, I think when the central bank stepped in last year to prevent spreads from widening, they may have gotten a little bit more than they bargained for. Not only did they prevent spreads from widening, but they got them to narrow to among the narrowest we've ever seen in history. So corporate bonds are looking very, very pricey at the moment. Now, you rightly point out that the Fed's holdings are, in fact, not all that large, but the fact of them stepping back might put this corporate bond market under a little bit of pressure. So we'll have to see how that plays out.
Eric, thanks so much. Thanks for joining us. Eric Norland, Senior Economist at CME Group. Thanks for bringing us your thoughts on the European market open this morning. Coming up here on the program, the hackers get hacked. US officials recover almost all the Bitcoin ransom paid to the perpetrators, a large proportion of it anyway, of last month's cyber attack on Colonial Pipeline. More on how they did it next.
surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. Weekday mornings on Bloomberg Television. The curtain will rise again.
Broadway's returning June.
Have you bought tickets?
It's busted out.
You've got more time here.
Commodities are up.
Keep going.
To the moon.
No.
Beautiful.
Bloomberg Surveillance. Weekday mornings on Bloomberg Television and Radio.
Welcome back to the European Market Open. Just coming up to 20 minutes into our European trading session, and things looking perhaps a little bit brighter here in Europe than they were. European stocks moving a little higher, up by 0.2% on the Stocks Europe 600. The DAX over in Germany stalling a little bit, but elsewhere a few bright spots. Let's roll on, show you what's happening on US futures. I think we have those for you as well. Here we go. There we are, fairly flat on S&P futures. So a slight deterioration actually in some of these US markets. We'll see how that levels out with what we've got going on here in Europe. And let's get to some individual movers here in Europe as well. We've got Aviva, Lufthansa and BAT for you. Aviva very much in focus because we've seen an activist investor taking a stake here, less than 5%, but interesting that they declared one of their moves is going to be to push for faster cost cutting and higher returns of cash to shareholders. Lufthansa also in focus this morning. Lufthansa down by 3.5%. We've had some commentary coming through from some of the brokers in this morning's session, which could be of interest. Goldman upbeat on budget airlines, downgrading flag carriers, having a bit of an impact there. British American Tobacco, an update from that business. They've upgraded their revenue guidance, and that seems to be outriding or outdoing the slight negatives in terms of their commentary around global travel, because that has an impact on that business, of course. Now, the US recovered almost all of the Bitcoin ransom paid to the perpetrators of the cyber attack on the Colonial Pipeline last month. Officials say that they captured more than 63 out of 75 Bitcoin traced to recipients of the ransom paid soon after the attack, which shut the country's largest gas pipeline. The stoppage caused widespread fuel shortages across the US East Coast. Bloomberg cybersecurity reporter Jamie Tarabay joins us. Really good to have you to talk us through all the details here. I mean, we say mostly because it was 84% of the Bitcoin that were taken that they've managed to claw back. It's only 52% of the dollar value, I think, but if you keep it in Bitcoin, maybe that's simpler. So, Jamie, what do we know about the government's clawback then of this ransom?
No, I was thinking exactly the same thing. They may want to hang on to that Bitcoin for a bit longer, and hopefully that value will go back up again. Well, I think one of the things that was really significant here, and one of the reasons I think that the FBI and the Department of Justice made such a sort of an announcement about it overnight, is that Colonial clued in authorities pretty early on in the game and included them in communications with the hackers, and were able to get sort of the electronic footprint, if you will, that allowed them to be able to trace the money when it was deposited into these electronic wallets. But then they were able to sort of watch them go through at least 23 different electronic accounts while they were trying to basically launder the money through to sort of the end recipient. And they used, sort of a federal authority, a warrant to be able to seize those funds. And, they've been tracking DarkSide, the group that is said to be responsible for this hack, for months. And really, it's a product of the company coming in very early in the game, pretty much almost immediately once they found out they were hacked, that they included the FBI and the federal authorities into the investigation that made this happen.
This is all really interesting. So they managed to identify the wallets, and that means that they could trace the money, trace the Bitcoin, and see where it had gone. I suppose this did probably raise a few eyebrows at the time when the ransom was paid, but now maybe we get a sense as to why that might have been an idea to do, because it was able to trace it afterwards. Can we consider this then a victory for the government, this ability to seize back 84% of the Bitcoin that were lost?
It's kind of when you show your tradecraft, right? And now that the government has shown that it is able to do this, does this mean that the hackers will wise up and put in preemptively measures that will prevent this from happening the next time around? I mean, is it going to be sort of this game of whack-a-mole? As long as companies clue in the government as soon as possible and they're able to have the resources and the ability to do it. It is anonymous, but everyone can actually see those payments. So there's invisibility to some extent. And, at the same time, at the end of the day, we do have to remember that while most of the money has been retrieved, the hackers are still at large. We haven't seen any indictments. And they still did get paid, although not as much as they were hoping to.
Yeah, 50 or so % of the money in dollar terms, I should say, still with them. So it was interesting that the Fed was able to then the FBI was able to get around this new technology that the hackers had been putting in place, that had tried to anonymize what they were doing. That was not successful. But as you say, they could step up their attempts next time around. What does this mean for companies then, like Colonial? It still means that companies are best advised to do something about their vulnerabilities.
100%. Even as they were particularly gratified that the government was able to recoup some of their funds, Colonial said that they still need to invest in beefing up their defenses against future cyber threats. I think one of the most recent examples that we've had of a major critical hack was of JBS, the global meat supplier. In the time that after they have been hacked, it was over a week ago now almost, that they were able to be back fully operational because they said that they had robust IT systems and encrypted backup servers that allow them to get around the ransomware attack that essentially hijacked their systems. The Biden administration is going to expect more investment from companies and I think also shareholders, because at the end of the day, this is going to be a business cost. So people will either have to pay it at the front end when they're paying for cybersecurity, or at the back end when they're paying a ransom. And there's obviously, as we've seen, no guarantee that they'll be able to get all that money back at the end.
Jamie, thanks very much for bringing us the details of this really fascinating story. Bloomberg cybersecurity reporter Jamie Tarabay, thanks for joining us. Coming up here on this program, Biogen surges after the FDA gives its Alzheimer's therapy accelerated approval, a possible game changer for treatment, but some scientists are skeptical. Still a lot to prove, it seems, when it comes to this Biogen treatment. We'll hear from the CEO himself, though. That conversation coming up next. This is Bloomberg.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the European Market Open. European equity markets then this Tuesday morning fairly flat in half an hour into our session overall, up by 0.2% though, so perhaps gains just building slightly, up by 0.2%, flat on the DAX, a little bit of upside on the FTSE and the CAC 40. Let's have a look at things from a sector perspective and tell you where we are. Slight bias to the upside when it comes to the sector breakdown, but it's not a very risk-on selection of stocks to the upside. Utilities, telecom and healthcare, the best gaining sectors, so that gives you a sense of maybe the mood of investors today. Autos and auto parts to the downside. It was the auto sector that was partly responsible for pushing European equity markets to new highs in yesterday's session, which is interesting to see that reverse today. Let's get a Bloomberg First Word News update. For that, we go to Singapore and Juliet Sali.
Anna, India's daily COVID case count has dropped below 100,000 for the first time in 2 months. But there are concerns that the Delta variant first identified in the country is leading to symptoms including hearing impairment and severe gastric upsets not typically seen in COVID patients. Data from England suggests the variant has a higher risk of hospitalisation. It's now spread to more than 60 countries over the past 6 months. Japan's economy shrank less than first reported last quarter. GDP contracted an annualised 3.9% from the final quarter of 2020 through to the end of March. That is a much better result than the minus 5.1% originally expected. Separate figures showed wages rose in April in Japan in the fastest pace since 2018. A US report is said to have concluded the coronavirus could have leaked from a lab in Wuhan in China. Dow Jones reports that the study was prepared last year by the Lawrence Livermore National Laboratory in California. It said the theory of the Wuhan leak should be investigated. US intelligence agencies have been investigating. Well, Chinese authorities have called in coal producers to discuss mounting fatalities in the industry, raising prospects for a crackdown that could further crimp supply. Along with surging demand from the economic rebound, restrictions have led to skyrocketing prices, with coal futures in China up about 50% from a year ago. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists. This is Bloomberg. Anna.
Juliet, thank you. Juliet Sali there in Singapore with that update on the First Word News for you. Now to today's big take. Pharma giant Biogen took a colossal risk in late 2019. It revived an Alzheimer's disease drug it had left for dead earlier that year after it appeared to fail 2 large clinical trials. But the company wasn't ready to take no for an answer. Biogen had poured years of effort into developing the therapy and was counting on it as its next big therapeutic advance. Yesterday, that paid off. The FDA has now granted an historic but controversial accelerated approval for the therapy. The shares of Biogen soared as high as 64% after the announcement, triggering a brief trading halt. Biogen will need to continue research for the drug for it to stay on the market. It's faced skepticism from some scientists after mixed results. Bloomberg spoke to the Biogen CEO.
Nowadays, you have, 3 treatments that have shown that binding characteristic to the amyloid plaque that is toxic around the brain and accumulates over decades. The way a plaque is toxic in the heart, we are able to penetrate the brain and gradually remove the plaque. And this is critical. And now there is not only aducanumab, there are 3 compounds. The next compound in the line is the one we have in collaboration with Eisai, that is BAN2401, that is now in phase 3, for which the phase 3 readout will be in a bit more than a year from now. So the FDA has done a thorough analysis of the entire data set. We had more than 2 million pages of scientific data being shared with the US regulator, having the efficacy and the safety profile thoroughly evaluated.
I understand that, Michelle, but there's also pushback by some scientists who question whether amyloids themselves are actually sort of the key to solving Alzheimer's. So you have a drug that may be successful in targeting those amyloids. How confident are you that that really is the problem that needs to be solved?
Well, it removes gradually the underlying cause, the pathophysiology of the disease. Down the road, there might be additional hypotheses, but this will take many years before we can see the scientific proof. And as I was just saying, today you have 3 compounds with similar activity, and we are the first one in the market. In a few years, there will be others, and we invite them because the market is so large.
Talk to us about the pricing strategy. Of course, you're saying that it's about $56,000 a year for the cost. For an average consumer, including the multiple year visits for a transfusion, required MRI scans, what would it cost the average consumer?
I think, to get things in perspective, we need to consider that the starting point is a $600 billion that society is spending in direct and indirect cost on this disease in the US only, and that the epidemiology is planned to triple by 2050. So yes, there will be some investment finally on treatment, on diagnosis, and I wish that we have diagnosis reimbursed soon. And technology is progressing very fast in that space, and I hope that soon we'll have also a blood diagnostics that will help, that will ease the broader population to have a biomarker in addition to the clinical diagnostic. This is important.
Michelle, do you think that we'll see other decision makers, other regulators look at the decision made in the US and fast track too?
I believe so. I believe so because the US FDA is so important, and they are the one that I worked the most on the global data set since more than 2 years. But we are also with a similar level of scientific engagement and respect, working with the Europeans, with EMA, with Japan, with Australia, with Canada, with Switzerland, with Brazil, where the product is filed and currently under review. And our aim is to make the product available everywhere.
That was the Biogen CEO, Michel Vounatsos, speaking there to our colleagues here at Bloomberg TV. Let's get some further analysis then of this interesting development. Sam Fazeli, Bloomberg Intelligence Senior Pharmaceutical Analyst, joins us here on set in London. Sam, really good to speak to you. So clearly so much hope attached to anything that is a step closer to helping deal with Alzheimer's. And there's plenty of hope now built into the share price of Biogen as we saw a significant stock price move. How excited are you about this development?
Yeah, that's a difficult one, Anna, and I wish I was a bit more excited than I am, because I've been a long-term critic, not of the idea, obviously, of trying to treat Alzheimer's disease, but the fact that the data are controversial. Now, nobody sees more data than the FDA does, so that has to be taken into account. However, the FDA convened a panel of experts back in the fourth quarter, asked them directly, with them having seen all the data, do you think this drug should be approved? And they all said no. So this is the part that's really confusing. What is the point of the FDA having these expert panels whose life is spent dealing with Alzheimer's disease if they then ignore what they say?
What is it that's controversial about the data? We got a suggestion of it there in that conversation. One of our colleagues talks about it being spotty, incomplete evidence. Yeah. What is it that's controversial?
2 trials were conducted. One of them failed, one of them didn't. And then when you look inside the data, you can find evidence of potential efficacy. But that is not the way that trials are done. You set up your rules saying, if this drug works, we expect it to do X. If you don't hit the X, you can't go and look for Y and Z inside the data afterwards, because that's not statistically meaningful. That's what's happened. What the FDA has done here, essentially, is kind of almost gone against its own 2018 guidance in approving the drug, saying, look, we have a drug that reduces the so-called biomarker amyloid. Absolutely, that's no question about that. The panel said, yeah, they all agreed it does. But that wasn't sufficient in 2018, but obviously now it's sufficient.
So how unusual is it that the FDA has decided to allow this drug on the basis of what the data we just discussed, but then said you'll have to provide more data if you want to stay on the market? Is that unusual? That isn't.
No, the FDA does that often, asks for phase 4 trials, so-called. And this trial will take, I think even the company might have said, about 9 years. So tens of thousands of people will be getting this drug. I hope it works for some. I have heard one of the top scientists on amyloid, Dennis Selko, say, look, even 15 to 20% of people benefiting from it is enough. I think that's what he said. The point is, it's going to be very interesting how the company then passes through the payment barriers, potentially, because there were no limitations set on this. Not even saying, if you're not lowering amyloid, stop. And it's just basically left to physicians and the payers. And the next question is, what are the EMEA? What is NICE in the UK? What about the rest of the world? What are they going to say?
Yeah, and certainly the CEO is hopeful that other approvers follow the FDA. We'll see whether that comes through then. Sam, thanks very much for joining us. Sam Fazeli joining us with the latest on Biogen and the Alzheimer's battle. Thank you very much to him. Coming up here on this program then, $13.6 trillion annually. That's how much global food inequality and waste costs us. We speak to one of the people behind the Credit Suisse Global Food Report on how they calculated this figure and about potential solutions. That conversation next. This is Bloomberg.
Europe's financial sector has made some progress with minority and female inclusion, but any momentum has slowed in the wake of COVID-19. I'm Francine Lacqua. We'll take a look at the pandemic's unequal impact on financial services. We'll delve into the data and some of the reasons behind the drastic drop of women in the workforce. We'll also get the views of two very senior women in the industry on creating an inclusive environment, retaining talent, and the future of work. All in our latest Money and Equality special this weekend on Bloomberg Television.
Welcome back to the European Market Open. 8:43 here in London. European equity trading looks like this. Bit of downside on the DAX. Elsewhere, moves to the upside. Aviva up by just over 3%. An activist investor now active there. Now, a new research report compiled by Credit Suisse has calculated that global food inequality and waste costs up to an estimated $13.6 trillion annually. The report says the sector is on an unsustainable trajectory and significant change is needed to address these environmental and health challenges. We're joined now by Credit Suisse Global Head of ESG, Eugene Kleck, to take us through the findings of this latest report. Eugene, good to speak to you. So let me start with that figure of $13.6 trillion in annual cost. This is the cost that we could avoid if we did things differently. What is that cost made up of?
Basically, good morning, by the way, Anna. The cost is made up of, on one hand, the cost of undernourishment, the fact that about 700 million people globally don't have access to sufficient food or sufficiently healthy food. At the same time, we have about 1.8 billion adults globally that are either overweight or obese. So we have people that have increased health expenditure, reduced or below average productivity levels. So the opportunity costs, as we see it, from those two factors alone, are about $13 trillion. And then over and above that, there's an environmental cost associated with the current unsustainable food cycle, as far as we're concerned.
And Eugene, how difficult is it to have then a global conversation about sustainability in the food industry? Because you do have very contrasting issues, undernourishment in some parts of the world, an obesity crisis in other parts of the world. It must be very difficult to have a meaningful global conversation because the regional disparities are so great.
Oh, I think that one of the key takeaways for us from this study is that it is somewhat ironic that this is not a bigger topic on the political agenda than it is. With COP26 in mind, and knowing full well that a sustainable agricultural and food system helps to achieve all of the 17 Sustainable Development Goals, this should be a much bigger topic than it currently is. And that it comes back to your point. There are built-in sort of issues related to this that probably prevents this from becoming a bigger topic.
One thing that is talked about often is, of course, moving to more sustainable diets in developed markets and more plant-based diets. Something you also reference in your piece, though, is what could be done in developed markets to reduce food loss and food waste. And this isn't just end consumers throwing away perfectly good food, but it is partly that. It's also about the production process, even in developed markets, which are supposed to be so focused on profits. What can be done in developed markets on that front?
Yeah, I mean, firstly, to put it in context, more than 30% of food produced doesn't make it onto our forks. That's about a $400 billion number of food that is lost or wasted. Across developed markets in particular, what we're looking at are things like smart packaging, particularly plant-based packaging. We also look at cooling services that are being introduced. And then, of course, you have certain technologies that address the lifespan of produce itself. You can extend the life cycle of a vegetable or a fruit by impacting the skin of the fruit, for example. And finally, things like donating, the circular economy. We can help reduce food waste significantly. Just to put it into context again, if we address food waste in the US and in Europe alone, that would add 10% of food available to feed the 700 million people globally that currently don't have sufficient level of food.
And what are the trends then, Eugene? As part of what you talk about here is about a change in diet being needed, and there's a lot written about the level of emissions that comes from meat production, of course. So if we are tracking trends towards more plant-based diets, where are we on that in some of the developed markets and also in emerging markets where in recent decades higher levels of income and middle-class aspiration have led to increased meat consumption?
Yeah, I think that our analysis quite clearly suggests that if we don't change behavior and if we don't use or don't sort of introduce new technologies, then emissions look set to increase by circa 50%. Fresh water consumption is set to increase by close to 40% over the next few decades. That's unsustainable. And as a result, what we're currently witnessing is a very promising development in terms of investment in alternative protein in particular. Several hundred companies globally are involved in developing alternative protein technologies, be it plant-based, be it cell-based, cultivated meat, for example, or fermentation-based. Most of these companies, however, are in a pre-development or sort of early development stage. But what is supportive, I think, as well, longer term, is that we see an increasing number of traditional larger food companies investing in these early stage companies, trying to transition their business towards a more sustainable path. And all of that is needed to get to a world where we have a mix of plant-based diets and alternative meat ingredients in order to become more sustainable.
Eugene, thanks very much. Eugene Clark, Global Head of ESG at Credit Suisse. Thanks very much for bringing us the results of that report on food sustainability in the global food system. Coming up, on the edge, global stocks are hovering near record highs, but are the gains sustainable? Now, policymakers are closing the stimulus taps. Just how close are we to that point? We get the take from the Market Live team. Laura Cooper joins us next. This is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to the European Market Open, 52 minutes into our European trading day, and European equity markets flat to positive in the round. Joining us now is Laura Cooper, Bloomberg Markets Live macro strategist. We hit all-time highs on European stocks, didn't we, in yesterday's session, Laura? So I suppose we're due a day of consolidation, if that's what today is. It's interesting when you look at the sectors that are leading the gains, such as they are today. They're quite defensive sectors, though, aren't they? If that tells us anything about risk appetite.
Well, and that's interesting, because that's actually what I was thinking when I was looking at my screens this morning. And yes, I do think we were due a little bit of a consolidation after yesterday's gains, but that doesn't really change this broader narrative for European equities. Just looking at the fact that we did have autos lead yesterday, those gains to another record high, and despite just this exceptional rally that we've seen in that sector over the past 12 months, they're still deeply discounted. So we have seen earnings revisions quite steep, but PE ratios of about 9 times, which is deeply discounted relative to other sectors. We are seeing Europe continue to benefit from that cyclical reflation trade. So I do think that the conviction is still there for European equities, even if we're going to see days like today when we are stumbling in certain sectors.
Yeah, stumbling a little. And in terms of where we are on the Treasury story, 156 is the yield on the US 10-year. We haven't moved all that far, it seems, in recent sessions, not alarmingly so anyway. And is that set to continue? Of course, we're building our way to some bigger data later on this week, but we have some data points to watch out for today.
Yeah, and that's really the key question facing markets. The fact that that U.S. 10-year Treasury yield has really been in a tight relative range since early April. So are we in these dog days of summer where traders are just kind of waiting for potentially later this year when we have potential Jackson Hole as the next catalyst? Or could we actually see the catalyst come from data this week? So that U.S. CPI print is the one we're all watching. But I would argue that maybe that is already priced in. We've seen break-evens start to come under pressure. We've seen those 5-year forward swaps come under pressure as well. And so I think this does point to the fact that markets are convinced that this inflation story could be transitory. But we will get some JOLTS data today, some NFIB survey data from the U.S. that's likely to show that wage pressures are building because roles just can't be filled fast enough. So that could see the inflation narrative creep in, and we could see treasuries come under pressure. But again, it's will that Thursday print really be a turning point?
Yeah, something else that hasn't moved all that far when you look at the past month or so is pound sterling, a little bit of upward move, but 141 seems to still be the handle there or thereabouts in terms of cable. And that takes me on to the question of the day. To what extent are reopening delays priced into markets, Laura? And I think about the pound because we had this story yesterday about the potential for delay, weighed on the pound a little early on, perhaps that story once again weighing on the pound a little, but it does seem to sometimes bounce back. What are your thoughts?
Yeah, and I do think that a lot of good news is priced into the pound. That's why we are seeing it struggling for upside against the potential for the reopening delay. But again, it's questionable. Really, markets aren't pricing in reopening delays, and that's probably understandable. If we do see a delay, it's likely going to be weeks, not months, and that's going to impact growth just at the margin, but really not kind of derail these recoveries. And so forward-looking markets are going to look through the fact that, you know, these UK consumers are just unleashing this pent-up demand. We are seeing strength across a number of indicators. And so I think really the pound-sterling pair is going to take, sterling-dollar pair is likely going to take more cues from the dollar this week than it's going to take from any kind of UK narrative around that delay.
Yeah, interesting that we got some survey data out of the UK talking about boosting sales of clothing and vacations and all sorts of other things in the month of May. How much has that been interrupted by policy moves, though? Laura, thanks very much. Laura Cooper, Bloomberg's Market Live macro strategist. Thanks very much for joining us as we close out the European market open. The surveillance early edition hour is up next. They will be sure to take you through all of the market action. A sunny day this morning in London. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada is going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
The power of Bloomberg. First on news.
Headlines crossing from Morgan Stanley to management shake-up, planning for transition in 3 years potentially.
This is a huge move over at JP Morgan. It is a shock, of course, to the market.
First on earnings.
Apple, a big beat, well ahead of the 33% increase in revenue.
First on markets.
The capitulation phase is by.
The power of the Bloomberg terminal. The power of Bloomberg television and radio. Bloomberg has it covered.
It's important to ensure that we strike the right balance. There are some countries that are below the 15%, quite a few of them are above the 15%.
The Department of Justice has found and recaptured the majority of the ransom Colonial paid to the Dark Side Network in the wake of last month's ransomware attack.
Well, it removes gradually the underlying cause, the pathophysiology of the disease. And our aim is to make the product available everywhere.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance, the Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. The U.S. recovers the vast majority of the Bitcoin ransom paid to the perpetrators of the cyber attack on Colonial Pipeline last month. Cryptocurrencies slide. Biogen soars after the FDA actually approves its Alzheimer's drug, while the victory has a potential to send waves through the industry, spurring rivals at work on similar therapies. Plus, Angola's Finance Minister, Vera Davis de Souza, joins us shortly for a conversation on vaccines and commodities. We'll also be joined by Salvatore Ferragamo's Michele Norsa to discuss the luxury recovery. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. India's daily COVID case count has dropped below 100,000 for the first time in 2 months. But there are concerns the Delta variant, first identified in the country, is leading to symptoms including hearing impairment and severe gastric upset not typically seen in COVID patients. Data from England suggests the variant has a higher risk of hospitalization. It has now spread to more than 60 countries over the past 6 months. Japan's economy shrunk less than first reported last quarter. GDP contracted an annualized 3.9% from the final quarter of 2020 throughout the end of March. That's a much better result than the minus 5.1% originally expected. Separate figures showed wages rose in April in Japan at the fastest pace since 2018. And a US report is said to have concluded the coronavirus could have leaked from a lab in Wuhan in China. Dow Jones reports that the study was prepared last year by the Lawrence Livermore National Laboratory in California. It said the theory of the Wuhan leak should indeed be investigated. U.S. intelligence agencies have been investigating that too. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, Europe's vaccination program has surpassed 270 million doses administered, and today the EU Parliament is expected to give final approval to digital COVID certificates, allowing free travel across the continent. Now, Germany is currently vaccinating about 1% of its population every day, but the EU's largest nation has now given out more doses than the entire continent of Africa. So how does the world remedy the discrepancies in the vaccine rollout? Well, according to some, the key to vaccinating the developing world may be intellectual property waivers, something to which the EU has expressed opposition. Now, over the weekend, however, U.S. Trade Representative Catherine Tai also said that progress was being made towards a deal. The latest draft from proponents of the waiver would set a time span of at least 3 years, allowing for a boost to production in countries still battling the virus. Well, joining us now to discuss all of this is Vera Davis de Souza, the Angolan Finance Minister. She she recently voiced her support for a waiver at the Paris summit in May. So, Minister, thank you so much for joining us today on Bloomberg. Minister, I wanted to start with what we're expecting from the IMF, which they're scheduled to announce their latest findings from the review in Angola, I believe, this Wednesday. Do you think Angola has made enough progress, or are there still reforms to be done to satisfy IMF conditions?
Thank you, Francine. Thank you for the opportunity. Yes, we think we are working hard to address the goals and the measures that we define to ourselves, and that the IMF is supporting us technically and financially to implement. So we're still committed with the program. We're still committed with the reforms. So we are highly optimistic around the result of this evaluation.
Minister, will Angola need a second IMF program once the current program ends at the end of the year?
We are now discussing and evaluating the various post-program options that we have. We are looking at the pros and cons of each option and discussing it with the mission, with the team of IMF, and internally in the government. So after this analysis and before the last evaluation, we will take our decision.
Minister, how concerned are you about, of course, the impact that the pandemic has on inflation and your currency? A reminder to all of our viewers, Angola is actually the second biggest oil producer in Africa.
As you know, the pandemic had a huge impact in our economy, direct impact and also indirect. Direct through the increase on the expenditures regarding health, and indirect because of the performance of the oil price and the drop on our growth. And all this with the reforms that is necessary regarding the free float regime on the exchange rate. It hit us very hard because we're still importing a lot of the goods that we are eating. So the impact of movements on the exchange rate have direct impact on the inflation. So the central bank is taking measures regarding the monetary policy, but most important than that is to putting in place the necessary measures for us to grow and to generate revenues and hard currency to benefit our international reserves and our exchange rate and our inflation.
So, Minister, what first of all is your growth forecast for 2021, and what do rising oil prices mean for your forecast? And secondly, how much foreign direct investment are you attracting to try and diversify the Angolan economy?
Well, we're still being highly dependent on the oil sector, it's true. So we still working with the oil sector industry to motivate them to make investments, to make sure that our production stabilize, stop dropping, and hopefully start increasing. We keep working on that front, but we are also creating the conditions to develop the non-oil sector at the agribusiness, small industries, fisheries, and financial service, capital markets. So we are putting in place the infrastructures and the proper environment to attract those investments.
Minister, is Angola planning to issue a Eurobond this year?
At the beginning of each year, we publish on our DMO website annual debt plan. So we already published it regarding 2021, and no, we are not intending to issue an Eurobond this year. We will see, we will foresee the financial conditions to think about next year.
Thank you so much for your time today. Vera Davis de Souza, they're the Angolan finance minister, joining us for an exclusive conversation. Now, we're also just getting some breaking news from the London Metal Exchange, because moments ago, we understood the decision from the LME to reopen the trading ring, and this is really a change of plan. Remember, it was the first time in decades that it was closed in March 2020, and then the London Metal Exchange had actually launched a review to decide whether, because of this closure, they were going fully electronic. In January, of course, a reminder, it's the world's oldest and biggest marketplace for industrial metals. They launched this consultation, and today the results came out saying they will actually reopen the trading ring, opposed to what we thought they would do actually just months ago. Now, Smart Conversations continue right here on Bloomberg Surveillance Early Edition. Later on in the program, we speak to Mr. Moneymaker, venture capitalist Eric Collins, about his new TV program. Before then, we'll speak to Michele Norsa of Salvatore Ferragamo about the luxury space and luxury travel. Up next, though, it's the PIMCO strategist, Jean Frieda. If you have any questions for our guests, just IB plus TV Go. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit Search Go to find answers now.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, European stock markets mixed this morning as investors await more clues on whether the pandemic recovery will stoke price pressure in developed markets. Traders counting down to the latest U.S. inflation reading on Thursday, one of the last major data points before the Fed's meeting next week. Now, also on the docket is the ECB meeting in the same day, when we may get clues on inflation and, of course, stimulus in Europe. Well, joining us now to talk about the markets and everything in between is Jean Frieda. He's PIMCO global strategist. Jean, it's been too long. I'm so delighted to speak to you on a day like most days where we worry about inflation, and there are the people that think that inflation is transitory and those that say actually because of the stimulus packages it's absolutely not transitory. Is this the one bet you need to get right for 2021?
Yeah, I mean, I think what you have to recognize about 2021 is it is a tale of two narratives, neither of which will be disprovable for at least a couple of quarters, if not a bit longer. And so it's really navigating through both of those and understanding how much protection you get in one narrative, call it the transitory narrative, from the messages and the policy stance coming from the major central banks. I think you probably do get more protection from those narratives, at least over the next quarter or so, because it's just too early to tell whether or not inflation is going to be transitory, and major central banks aren't going to change their tune until they're confident that the recovery is well entrenched and underway and broadening. And you're actually seeing the impact on labor markets as support packages are withdrawn. So two narratives, you have to navigate in between the two of them. But we think right now it's probably the head fake narrative, transitory inflation, that's the dominant one.
So, Jean, how much recalibration? So when will be fixed? When will we be fixed on what kind of inflation we'll have? And if it takes 2 to 3 months, how do you position yourself, in that time period?
Look, I mean, I think under the scenario of transitory or the scenario of persistent, bond yields are very low, and so from that perspective, I think it's no one is going to make a big bet on the idea that recession risk is right around the corner. It is interesting that what is happening with this inflation is that to the extent that the hump is higher and the persistence is a bit longer, there is a discussion about the impact that it has on the recovery. Real incomes suffer from higher inflation in the short run, even if inflation is transitory. And so I think from that perspective, the way that we steered through it is, at some level, where are the asymmetries? Bond yields, it seems very unlikely that they're going to go down by much relative to what they can do if either inflation is more persistent or the recovery is just really strong. And that's a related discussion we're having, which is where are we in the cycle? Are we early cycle? Are we mid-cycle? Are we late cycle? You can see elements of both in different sectors. Yeah. And frankly, given the supply constraints, given the bottlenecks, it's just a little bit too early to tell.
So again, what does it mean for where what do you buy right now, actually, given the uncertainties that you so eloquently put together?
Yeah, I mean, I think where we are right now is, number one, I think we are inclined toward, rather than having a strong, overweight or underweight in core duration and fixed income, we're probably more inclined toward curve steepeners on the basis that central banks will remain very dovish, at least for the next couple of years. And so, bond yields will kind of drift higher in the back end as the recovery continues and matures. We also think, we will continue to see dollar weakness over the cycle. And where you are particularly now is one in which the laggards, particularly the emerging market currencies, can start to see some material catch up. Part of that is because the central banks there are not certain whether or not, their inflation expectations are less well anchored. And so they're actually hiking rates, while the developed economy central banks are keeping them very, very low and very accommodative. And so we think that gives potential to catch up after a long period of underperformance, particularly for the economies that are, getting through the last COVID hump later and vaccinations later. We think it's their turn now.
Jean, I was looking at some of your notes, and you say that, China's continuing to lose steam. What do you do with, in general, emerging market assets, but China in particular?
Yeah, I mean, I think everyone focuses on, the Chinese credit impulse, the change in the pace of credit flow to the economy. And, that credit impulse, which tends to lead growth by a couple of quarters, has slowed quite materially. It has been a concern to a lot of people. I think the way that we see it is, unusually, credit impulse comes as a function of GDP growth. GDP fell last year. It's rebounded this year. So, there's kind of a denominator effect on the credit impulse that distorts, the turn lower. We think China's slowing gradually. We don't think it's slowing dramatically, and we think that gradual slowing coupled with the strong acceleration in developed economy demand basically creates a very supportive environment for any cyclical asset, and particularly for commodity prices.
But could we actually see some massive stimulus coming from China as this U.S.-China kind of, war trade continues?
I don't think so. I mean, I think, we are transitioning to a much more conservative China, conservative policy reaction function, part of that is because of the pressure coming from the U.S. There's a recognition that this pressure won't go away anytime soon. The U.S. is trying to kind of build a coalition of democracies to confront China. And that makes China much more cautious about protecting any vulnerability or perceived vulnerability, one of which is the high debt levels. And so China's become much more averse to stimulating at any cost. And we think they're using the stimulus in the West to basically try to delever is too strong of a word, but at least to get leverage, the growth in debt under control.
Jean, thank you so much. Jean Frieda, their PIMCO global strategist, joining us this morning. Now, the U.S. recovers most of the Colonial Pipeline ransom money. The Department of Justice warns hackers that the U.S. will use all available tools to make those attacks more costly. We'll discuss that next. This is Bloomberg.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Earlier today, the Department of Justice has found and recaptured the majority of the ransom Colonial paid to the dark side network in the wake of last month's ransomware attack.
So the U.S. recovers almost all of the Bitcoin ransom paid to the Colonial Pipeline hackers. Now, Colonial paid the Russia-linked ransomware group $4.4 million, or 75 Bitcoin, after the cyber attack caused fuel shortages across the East Coast last month. Now, joining us for more is our cybersecurity reporter, Jamie Terabay. Jamie, great to have you on Daylight today. So what do we actually know about the U.S. government's clawback of the ransom?
Well, what was very, very sort of significant with this announcement that the DOJ, the Department of Justice, and FBI carried out overnight is that they said that they brought in that Colonial Pipeline when it was hacked on or about the same time that they learned that they were the victims of a ransomware attack. They brought in the authorities, and because of that, supposedly, this allowed the FBI and sort of federal agencies to gain a greater sense of awareness and understanding of the hackers known as dark sites that they had already been investigating for several months now. And so when the payment was made, it went into a wallet, and the payments can be seen. There's nothing sort of anonymous on the blockchain other than sort of access to those wallets. And somehow, they don't say how, but the FBI did gain access to a private key, which is almost like a password to someone's email account, and that's how they were able to seize the 63.7 Bitcoin. It's worth a little less now than it was when Colonial paid it out. It's now worth about 2.3 million, but given Bitcoin fortunes, they may see an uptick in that value, in a couple of weeks from now.
So, Jamie, it doesn't let companies off the hook, right?
No, not at all. I think that one of the biggest things that we saw, even as they were very sort of happy that the money was recovered, Colonial did come back and say that they needed to do more to beef up its cyber defenses. The Biden administration is spending a lot of money to build in cyber protections, and there's going to be more sort of demands for accountability and transparency from the private sector as well. And that's not just, obviously in the States, this is a global thing. We've seen, JBS, the global meat supplier, was attacked not too long ago. They're operational again because they said they had a much more robust recovery system in place. But we've also seen what happens when hackers get hold of, a government healthcare system, as they've done in Ireland. This is a problem that affects everyone. Ransomware attackers are becoming more and more aggressive and ambitious in their scope. And it's certainly, just because this happened doesn't mean it's okay and the money will somehow find its way back to you.
Jamie, thank you so much. Jamie Tarabode, our cybersecurity reporter. More on this shortly. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Now, the U.S. recovers the vast majority of the Bitcoin ransom paid to the perpetrators of the cyber attack on Colonial Pipeline last month. Cryptocurrencies slide. Biogen's soars after the FDA approves the Alzheimer drugs, while the victory has a potential to send waves through the industry, spurring rivals at work on similar therapies. Plus, venture capitalist Eric Collins joins us to talk about his new TV program, Moneymaker. But up next, we'll discuss a luxury recovery with Salvatore Ferragamo's Michele Norsa. So good morning, everyone. I'm Francine Lacqua here in London, and welcome to Bloomberg Surveillance Early Edition on this Tuesday, the 8th of June. So as the EU debates virtual vaccine passports, the bloc's reopening is firmly underway. Encouraged by extra cash in the company's pockets, Europe's luxury industry hopes to demand that evaporated at the outset of COVID will return through the summer. Well, joining us now is Michele Norsa. He's Salvatore Ferragamo, Executive Vice Chairman. Of course, Ferragamo is a major Italian luxury brand. So thank you so much, Michele, for joining us to make us smarter on the luxury sector. And what you are a great student of is, of course, understanding how we travel and shop and how that will change in post-pandemic. Given the last 12 months, what we've lived through, how do you think will be the major change for the luxury world in the future?
But you see, I think there is a major rebalancing in terms of consumers and in terms of geographies. In terms of geographies, of course, global luxury companies have been facilitated because Asia, China, still driving a market, were able to compensate in some way the failure of United States and Europe. But now getting into 2021, while we see United States restarting with a very stronger than expected recovery, and showing numbers which are even better than 2019, we have Europe still in deep difficulties, and we still see the capitals in Europe as phantom cities. I was very impressed. I was in Paris the last weekend, and really it looked quite sad in a certain way. On another side, the rebalancing we will be facing now, it's between different consumers. I'm a fisherman, so I think I look at the luxury industry as fishing in three different ponds. So you have a pond of the local customers, which were not so important at a certain time, but now they are picking up from China to Europe to United States. You have, of course, the affluent tourists, which were representing the real driver of growth. And then you have online. Now, I see in the future a rebalancing of these three categories, and I don't say they will go to one third, but who knows? In 5 or 10 years, that could be the new balance.
But as economies pick up, what did you see in China? Are people flocking back to luxury companies? Or are they flocking back to buy stuff because there's been so much pent-up demand for the last 12 months? Or does the way we change, and because we've been working from home, so the way we shop change almost forever?
But China has a capacity of reaction which is truly unbelievable. I always look at the flights. China is the only country where domestic flights have gone already to the level of 2019. Even now, probably in the last months, with double-digit growth. So the domestic consumption is driven by the economy, is driven by the demography, because still people are growing in number, and I think also by the capacity of income. So people are getting richer, they have more money available for spending for themselves. They are not traveling anymore So they, in some way, they can even spend more locally. Inside China, you see major differences. While the north was always the area where people were spending more, like it happens in most countries, for wear and luxury. Now the south, with the technology, Shenzhen is becoming the capital of China, as Miami for United States. So you see there are areas which are picking up faster, but the big difference is made by investment. Chinese, they never stopped investing. There are probably more than 200 new malls under construction, and the opportunity to get further to new territories and to reach new age groups becomes even bigger. If we look in the next 5 years and we imagine China economy and China consumption of luxury goods to grow in a similar way, definitely for most companies, they will represent 50–60% of the turnover.
Which is quite incredible, actually, some pretty extraordinary figures there. Michele, what are you seeing in Europe? So I know everything depends on vaccine passports and when people will be able to travel again, but specifically, what does it mean for duty-free stores?
Well, you know, this is a major concern. Let's say while domestic traveling has recovered, fully recovered in China, up to probably 80–90% in the United States, international is still at 1/3 of its full potential. Let's say is very, very far from 2019 numbers. Still, European airport, I was checking in Paris, is in the area of 30% in terms of number of flights. So all of the duty-free, let's say the travel retail industry is suffering, but also the European capitals are under pressure, both in terms of real estate. I'm talking about real estate value for offices and commercial, if you want, while probably residential remains strong. And the point is, both Asians and Americans don't see Europe as a safe haven. So I think people for traveling now, they want to have safety, they want to have security even from violence, and that they want to know exactly about the vaccine, and also they want to have a clear policy in terms of visa and quarantine. So Europe is penalized. There are different rules between the UK and continental Europe. Rules are changing every 2 or 3 weeks, and I think a recovery for Europe will come later in 2022, going back to normal probably only in 2023.
How much of a difference will the EU recovery plan actually make? So I don't know whether it's infrastructure that will help drive tourists, or whether it's just as you've explained, it's just that rules are a little bit all over the place, so that will deter travelers. Like, as you know, as a chairman of a big company, what do you need from European leaders today?
I think this is extremely important. In fact, when you look at the true luxury travelers, they are looking for a few number of things. They have clear driver. One is shopping, one is food and beverage, one is art and culture. And I think Italy is definitely leading in all of these areas. Where probably Italy is weak is in infrastructure and services. And I must say that not all European countries are really able to offer to the tourists what they are looking for. What is quite interesting, it was in a BCG document recently, is that the Chinese are driven more by food and beverage than shopping. Americans by shopping, and Europeans by wellness. So Europeans will probably travel more in Europe looking for wellness and quality in art and culture. But to attract American and Asians, not only Chinese, it will be fundamental to give them the services they are expecting, and also to promote and create easier condition. And I think that the flying industry, the airline industry, will play a fundamental fundamental role. At this time, ticket prices are going up very substantially, from the low cost to the normal IATA airlines. They are in an area of 50+ increase.
As always, thank you so much for joining us, Michele Norsa, there with a lot of insight, of course, on his industry, the Salvatore Ferragamo Executive Vice Chairman. Now, coming up, we also speak to Eric Collins, the Chief Executive of Impact X Capital Partners, a venture capital company supporting underrepresented groups across Europe. Now, we discuss his new business reality series, also The Moneymaker. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Global policymakers are crafting their international tax plan to make sure Amazon is included, even though the tech giant's profit margin is below the 10% proposed threshold that would give other countries rights to collect revenue. Amazon has an estimated 7.1% global operating margin this year. Bloomberg understands one scenario involves targeting individual operators like Amazon's more profitable cloud computing unit rather than the entire company. Bloomberg has learned that SoftBank is seeking a loan of some $7.5 billion tied to its planned sale of chipmaker ARM to NVIDIA. The proceeds would provide investment funds for SoftBank's Vision Fund with collateral provided by the ARM disposal. Mitsuo Bank is coordinating that deal. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, my next guest is the Chief Executive of Impact X Capital Partners, a venture capital company supporting underrepresented entrepreneurs across Europe. He's now hosting a new business reality series called The Moneymaker. Now, the series follows him in his quest to offer not only his expertise, but also investment into 4 small, struggling British businesses. Eric Collins, welcome to Bloomberg Surveillance, the early edition. Eric, I think we spoke about 12 months ago, and I think, you know, what I was dying to ask you is, are things getting a little bit better? You're, fighting the good cause and trying to get money in groups and entrepreneurs that in the past just didn't get access to more, I guess, some of the more mainstream entrepreneurs that we see out there. Are things changing as they should?
ImpactX actually did a study that had us focusing on what's going on over 2020 and a little bit before that, the 10 years preceding that, in terms of putting money into the hands of underrepresented entrepreneurs. This was done by Extend Ventures, a research organization in the UK. What we found is if you're looking specifically at the UK, that the amount of money that had actually been invested was only 2.9% for women, that's all women, including white women, that 0.2% of venture capital pounds and pence went to Black founding teams, and less than 0.02% went to Black women. That indicates, if we look at the last 10 years, that number has remained flat. So maybe the good news is that, indeed the pandemic hasn't decimated those businesses in terms of getting financial support, but it certainly hasn't advantaged them in any way in getting additional financial support. And if you look at some reports that are coming out of the US, we find that the amount of money invested in women in particular has gone down precipitously between 2019 and 2020, at least from a venture capital perspective. And that's the sector that we've been expecting to come up with these fantastic companies, the next Amazon, the next Netflix. We'd expect that kind of funding to be able to drive those sorts of returns a decade or so from now. And without that sort of investing in these sorts of communities, it's unlikely that we're going to get the kinds of results we're looking for, which is breakout companies coming from underrepresented entrepreneurs that we would then be talking about on this program, 5 or 10 years from now.
But Eric, first of all, why is the pace of change in this so glacial still?
Even though you had a man named George Floyd who's murdered on television, and you then see from that all sorts of conversations and statements about we want to do things differently, we're actually going to make a change. Change is coming pretty slow in terms of actually fulfilling the responsibilities and fulfilling the promises that have been made under sort of that time of heightened attention to systemic racism, systemic misogyny, and sexism. Now when the rubber hits the road and we're saying, well, let's actually measure what has happened, how much money has been put to work, how much money has been put into Black banks, how much money has been put into women entrepreneurs, we're finding that process that has been talked about is still being talked about and is not actually being implemented. And of course, the solution is that capital, which exists out there, capital which is existing from banks, venture capital companies, private equity companies, should be invested in underrepresented entrepreneurs of all sorts, because that is where there's a great inefficiency in terms of capital investment and a great opportunity for upside based on looking at inefficiencies in the marketplace.
But Eric, I speak to a lot of chief executives that are telling me that things are changing, that actually, even some of their lending facilities are changing. So if it's not changing, what needs to be the catalyst for actually capital to flowing to some of these amazing entrepreneurs that for so many years have been underrepresented that could actually be the next Amazon?
I think you're going to have to look at organizations like ImpactX, Francine, as the solution. Even if an organization says today, what I want to do is transform how I'm investing, how would they actually begin? If the numbers are telling us that hasn't been happening over the last decade, where suddenly are they getting the network to come up with the organizations in whom they would actually be investing? Suddenly these organizations who have never had a woman partner, never had a Black partner, never had an Asian partner, are suddenly going to find themselves in the middle of some of the most exciting deal flow. How would they do that? So from my perspective, I understand people make these statements. I understand that they measure this by sort of the commitments that they're making. Then the question is that commitment actually getting into the hands of the entrepreneur? And the numbers that I'm telling you indicate it's not. And I would say that it's a network effect, because people are investing in their networks. They're investing with people that they know. They're getting recommendations from people who are already there. We know that there's underrepresentation at the board level. We know that there's underrepresentation in the C-suite. We know there's underrepresentation in the general partner categories for the various private equity firms and those who are extending risk capital, as well as the banks. So I can't imagine that people would say that they suddenly have, after 1 year, a fantastic sort of an epiphany, and they are suddenly able to get into the networks for the deal flow, which would actually create then the opportunities. And that's what I think is is the missing piece. I think, it deals with hiring, it deals with network, and I particularly always focus on the network effect. If your network doesn't have these people in these companies, how are you actually going to get there?
Eric, congratulations also on your business reality show. Does it actually make a difference of, people seeing businesses wanting to be part of it or giving you more money because of it?
Well, that's three good questions, Francine. Thank you. The reality show program itself is kind of an extension of ImpactX. It is looking for undiscovered gems that exist around the UK. It's based on the American television show that's on CNBC called The Prophet. We're on Channel 4 and can be watched on all four for those people who haven't seen us. And it's called The Moneymaker. And The Moneymaker is seeking to go to places and to the kinds of institutions that don't normally, the kind of industries that don't normally get the kind of investing that I do. These are organizations. One was in the invisible repair space. Another one was a bakery. Another one is prepared frozen meals. Those don't normally get the attention of venture capitalists who are seeking to find the next Airbnb. So to go into those organizations, to go into those communities and say, look, your business is struggling because of COVID. All businesses are struggling of your size because of COVID. We have an idea, and I think that I can bring my resources as well as, which is not just my capital, but also my network, to help come up with a new transformational plan that'll make you a bit future resistant and possibly even help you to grow at an exponential rate. And that's what we bring to these organizations. And hopefully there are individuals who are watching who would say either we're similarly situated and I'm learning some lessons, or, this is something that I could do, and maybe I will get on the entrepreneur business owner train. It's been quite rewarding for me to actually be able to participate with the companies that I have. Fantastic entrepreneurs.
Eric, thank you so much for joining us. Hope is a regular. And actually, you should have also a show on Bloomberg. Eric Collins there, ImpactX Capital Partners Chief Executive Officer. Now, coming up, the FDA gives Biogen's Alzheimer's therapy accelerated approval, a possible game changer for treatment. Some scientists are skeptical. Up next, we speak to Sam Fazeli from Bloomberg Intelligence on all of this. This is Bloomberg.
surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, pharma giant Biogen took a colossal risk in late 2019. It revived an Alzheimer's disease drug it had left for dead earlier that year after it appeared to fail 2 large clinical trials. Yesterday, that risk paid off. The FDA granted a historic but controversial accelerated approval for the therapy. Well, for more, we're joined by Sam Fazeli, Bloomberg Intelligence Senior Pharmaceutical Analyst. Sam, thank you so much for coming on the story. Now, when you read some opinion pieces, they say that actually this was the worst decision and also questions why it was now given approval. Others hail it as a game changer for the industry that will lead to more therapies being discovered. Is the truth somewhere in between?
Yeah, Francine, this is the day that we should all be doing a victory lap around the office or wherever we are, because it's been such a long time since a new drug has been approved for Alzheimer's disease. Unfortunately, what you just described is actually a reflection of what's going on in the scientific community as to the view that people have to the importance of the parts of the disease that this new drug addresses, i.e. those amyloid plaques in the brain. So the scientific world has been divided between those who are believers and those who are not. And whatever the case is there, we do now have an FDA-approved drug where there's also controversy over the actual benefit that it might provide, and we'll have to wait and see how payers, society, doctors, etc. approach this.
So, is the controversy real, first of all, Sam? And what is actually the controversy about?
Yeah, the controversy is absolutely real. The data, as you rightly said, it first failed to achieve the endpoint that the trial was designed to achieve. And then they looked deeper into the data and they found some evidence of potential activity. The problem is that is not how clinical trials are designed. What the FDA or looked at or used, what the FDA seems to have done here is to say, look, we've got a potential drug.
Sam, thanks so much. Sam Fazeli there. Of course, we'll have plenty more from Sam throughout the day. This is Bloomberg.
Vietnamese people have shopped at wet markets or mom-pop stores for decades, and now e-commerce companies are trying to change this habit. Those including regional players like Shopee or Lazada or local startups Tiki have been building loyalty and trust by providing Vietnamese with services that are common in developed economies but very new to this country.
Mình chỉ cần ngồi ở một chỗ thôi và lên một cái trang web chẳng hạn thì mình có thể tìm được là rất nhiều những cái mặt hàng ở trên đó. Thứ hai nữa là về cái tốc độ giao hàng thì bây giờ cũng đã nhanh hơn rất là nhiều rồi, thậm chí là có những cái mình có thể nhận sau 2 tiếng như Tiki Now chẳng hạn.
The epidemic has given digital retail a boost, with more Vietnamese buying everything from food to electronics online.
Còn một cái nữa đó là tại vì cũng đang dịch ấy, thế nên là nếu mà mua hàng online thì sẽ an toàn hơn cho tất cả mọi người, bởi vì là mình sẽ không cần phải ra ngoài và tiếp xúc với nhiều người.
The country's e-commerce is expected to reach 29 billion in 4 years from 7 billion last year. The government is also encouraging this sector with target of online shopping to account for 10% of Vietnam's retail sales by 2025.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Europe's financial sector has made some progress with minority and female inclusion, but any momentum has slowed in the wake of COVID-19. I'm Francine Lacqua, and we'll take a look at the pandemic's unequal impact on financial services. We'll delve into the data and some of the reasons behind the drastic drop of women in the workforce. We'll also get the views of two very senior women in the industry on creating an inclusive environment, retaining talent, and the future of work. All in our latest Money and Equality special this weekend on Bloomberg Television.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
I think the Fed, as well as the markets, don't really mind rising rates as long as they're rising for the right reason, which would be inflation.
I do think this is a bit confusing for the market at the moment, and it would be quite good if we had one consistent message from the US.
The bottom line, though, is we're getting a big spike in inflation here, and we're looking for another big number this week with a 0.5 rise in the U.S. core CPI.
This is Bloomberg Surveillance, early edition, with Francine Lacqua, Matt Miller, and Kaylee Lyons.
Well, good morning from London, Berlin, and New York on this Tuesday, June the 8th. The gang is back. Our top stories today. Game changer Biogen's big bet on an Alzheimer drug pays off. It's likely to lead other drug makers to come out with their own therapies for the disease. The hackers get hacked. The U.S. uncovers digital addresses and recovers almost all of the Bitcoin ransom that Colonial Pipeline paid after last month's cyber attack. And better video, stepped-up audio, and lots of privacy controls. Apple previews the next generation operating system that will run on everything from iPhones to smartwatches. Well, good morning, everyone. There's quite a lot going on. We begin with some headlines from the White House. President Biden setting up a task force also for short-term supply chain issues. And this, Kaylee, is something that we've been looking in and out because of the chip, of course, shortage that has really affected all industries across the board. I don't know whether it's playing out in the markets today.
Well, it does in a sense, Francine, because that is something that feeds into kind of inflationary fears, these supply chain issues, and the markets continue to grapple with what inflation is going to do. Of course, we're awaiting that CPI data on Thursday. And where that leaves us is a market that's really looking for direction. The direction in the Asian session was mostly lower. The Kospi, the Nikkei, the Hang Seng, all down. It was Chinese equities that actually underperformed, with the CSI 300 down about 0.9%. Speaking of Chinese assets, I do want to note what was happening with the 10-year government bond yield. It's sitting right around 3.14%. You did have some comments from the finance minister in China yesterday that may be easing some supply concerns in this market, but that is something to watch. And in foreign exchange, I would note the Japanese yen weaker against the U.S. dollar. It is a broadly stronger dollar story in the G10 space today. Speaking of U.S. assets, a quick check on what futures are doing. We are struggling for direction at the moment, though slightly positive, up about 0.5 point on S&P E-minis. In the Treasury market, we're around the lowest since late April on the U.S. 10-year yield. It's sitting about 1.56%. I would note crude as well. WTI seems to have topped out around that 70 level. It is now lower for a second day, sitting at around $68.69 a barrel. And then, of course, I would note Bitcoin and other cryptocurrencies are under some pressure today, Matt. Right now, the Bloomberg Galaxy Crypto Index is down by about 8%.
Yeah, watching Bitcoin very closely. So much news on, Kaylee, you know, the Feds possibly hacking servers that hackers use to store private keys and then getting Bitcoin back. So very interesting stuff that we're going to dig through. Right now, I want to bring you some breaking economic news in the Euro area. We had first quarter GDP revised up to a loss of only 0.3% in the first quarter. Previous estimate had been for a loss of 0.6%. If you look at the year-over-year number, it's a drop of, or a contraction of 1.3%. That's better than the contraction of 1.8% that had been in the earlier estimate. We're also getting German investor expectations as measured by the ZEW index right now. June ZEW investor expectations falling to 79.8 from an estimate, well, the estimate had been 86, but falling down to 79.8, so missing the estimate and missing the previous reading as well. Right now, we don't see a lot of follow through in terms of the markets, but let that sit for a minute. It has just come out across the tape. Take a look at what's going on in Europe. You can see here that there's a lot of gray on the screen. That means there's not a lot of movement in one direction or the other. You do see France and the UK gaining, Portugal and Austria right now, as well as Switzerland falling. But otherwise, you don't see a lot of direction. The Stoxx Europe 600 is gaining about 0.2%, so the broader benchmark is up right now. You have a 10-year German Bunds trading at minus 20 basis points, and they've been there all morning, so watching to see any movement there. Interesting to watch the euro pound. It looks like the euro may be gaining some ground. Well, it certainly is gaining ground right now, but maybe gaining a little bit of runway for a takeoff against the pound at 86 pence. And then Intermediate Capital Group is a private equity fund that trades in the UK. It had big beats in its earnings report. Citi among the analysts that really like what it sees, and as a result, you see a gain there of 5.5% for ICP, or Intermediate Capital Group, Francine. So there's a lot going on today, especially around individual stock stories and industry groups, waiting really for the big macro data to come out in terms of inflation from the US on Thursday, in terms of the ECB here in Frankfurt on Thursday.
Yeah, I love how you say ZW. It makes me always think of Pulp Fiction between the Z and the Z's. Now look at what else is going on today. We'll get, of course, some data out of the U.S. with the trade balance for April, 8:30 a.m. and job openings at 10 a.m. New York time. Then shortly after, it's the Bloomberg Deal Summit. Hear from chief executives, investors, insiders about the driving forces behind the boom in M&A. That's from 9 a.m. New York time. And then a little bit later after that, also follow along the chief executive of Colonial Pipeline as he testifies before a U.S. Senate committee. Will be on the lookout for any more details about the recovery of that ransom, one of our favorite stories today. And then the World Trade Organization kicks off a two-day meeting today under discussion, expanding the production of COVID vaccine facilities. Now, onto pharmaceutical stocks and shares in company Biogen surged yesterday after its controversial Alzheimer's drug was granted a historic approval by U.S. regulators. The company's chief executive, Michel Vounatsos, spoke to Bloomberg after the news.
Down the road, there might be additional hypotheses, but this will take many years before we can see the scientific proof. And as I was just saying, today you have 3 compounds with similar activity, and we are the first one in the market. In a few years, there will be others, and we invite them because the market is so large.
Well, joining us now is Bloomberg opinion columnist Max Neeson, who's argued that the FDA approval is a big mistake. So thank you so much, Max, for joining us. So it is confusing, actually, because a lot of the press is saying this is amazing. It will actually spur more companies to do these, these type of therapies. And you actually argue that this was a huge mistake, and it could also, lead, I guess, to more investigations.
Yeah, I feel very strongly that this wasn't a very good decision at all. So Biogen, the evidence for approval is based on 2 studies, mainly that it ran testing the medicine. One of them failed very badly. One of them was a pretty marginal success. But because of the sort of enormous unmet need, there's no therapy that does anything but treat the symptoms before this. The FDA was convinced to give it a shot anyway, but now the U.S. is set to spend what may be billions of dollars on a medicine for which there's really not good evidence that it does anything at all, and the effect for patients, even in that good trial, was quite modest.
Why do you think the FDA approved this, considering the fact that the trials didn't go well? In fact, were halted when Biogen realized they weren't going to go well. And, now they have to continue trials that, of course, they're going to drag their feet on and take as long as they can to get those results while they pull in the cash from this $56,000 a year treatment that, in your column, you point out could cause brain damage.
Yeah, so I really think they were just convinced by the fact that there really aren't good options. And there is a sort of a statutory mandate that the FDA be more flexible in those cases. But even with that in mind, I do think that they push the standard much too far, given the really limited and contradictory nature of the results. And the fact that this isn't, a side effect.
Hello, traders. Are you ready to trade euro? I'm placing an order to sell short euro at the price 121, 75.3. Okay. If you're looking to trade today euro, you can place order. You still have time at the price 121, 75.3. Otherwise, you can follow my trade. You can copy whatever imaginary these days people using paper, or do paper trades and see how we trade. If you want to find out more, find more information about why we place order at this price, how we trade, you need to get the strategy, and you need to go to company.co.uk. Otherwise, just follow us and see how we trade. You can subscribe to our channel, and you will receive notification when we stream new, when we going to place new orders. All this information you will receive instantly to your account. Okay, I'll speak to you later, guys. Stay safe, and hopefully it will get filled soon. Okay, stay safe.
All right, so officials saying they seized 63.7 Bitcoin, currently valued at about $2.3 million. But the interesting thing is it's almost impossible to guess a private key. Your chances are 1 in the number of atoms in the visible universe. So in order to do this, they must have had the private key on one of their own servers, gotten it from a custodian or an exchange. Bloomberg's Jamie Terabay joins us now for more. I guess the other possibility, Jamie, is that they hacked a server used by this dark side group and found the private key there.
I feel like I'm talking to Detective Matt Miller this afternoon. I love that we've been discussing this beforehand, and I think you're right. I think that there's going to be some kind of detective work or a little more sunlight on just how the FBI managed to get this private key. If, as you said, that we know that their servers went down at one point and they were out of commission, and if they were, as you said, silly enough to leave it on a server like that, then that kind of just let the door wide open for the FBI to walk in. So, this is a win, obviously, for the FBI and for the DOJ, and also incredibly rare, as you said. And even as we talk about the ins and outs, and Colonial probably sitting on that bit of Bitcoin until it increases in value again. The dark side guys are still at large. They're still doing what they're doing, and they still got paid, even though it wasn't as much as they'd initially asked for.
All right, we have to leave it there. Thank you so much to Bloomberg's Jamie Terabay. I do want to take a quick check now on some stocks moving in pre-market trading here in the U.S. One of your big outperformers to the upside is actually Stitch Fix. It is higher by about 15% in early hours after results after the bell yesterday. Its forecast really the key. It beat expectations. You also had Marvel Technologies reporting after the bell yesterday. It is higher in pre-market trading after those topped analyst estimates by about 4.5%. And then we were just talking about Biogen with Max Meeson, the FDA approving the company's Alzheimer's drug. That sent shares higher by nearly 40% yesterday. Today, though, they are lower, down the better part of 1% in early hours, Francine.
Yeah, so much going on. Coming up, Christian Muller-Gleesman, Goldman Sachs Managing Director of Portfolio Strategy and Asset Allocation. That conversation is up next, and this is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada is going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
The power of Bloomberg. First on news.
Headlines crossing from Morgan Stanley to management shakeup, planning for transition in 3 years potentially.
This is a huge move over at JP Morgan. It is a shock.
I'm going to move
Apple, a big beat.
order to play to sell short euro to 121.75. Okay, bit lower.
Power of the Bloomberg terminal.
So please move your order lower. Okay, and stay with me.
Has it covered.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kaylee Lines in New York. We welcome all of our radio listeners as well on London DAB Digital. I have so many charts that I wanted to show, and I was thinking, what's the easiest I can do to walk the radio listeners through since they can't see? Well, I've decided to pull up the reverse repo chart once again. It's been a favorite of mine over the last couple of weeks. And the interesting thing here is this is a chart that goes back to 2016. 2016, 2017, really the last time we saw a lot of cash stored in the Fed's reverse repo facility. Then there was nothing for the next few years until just a blip at the beginning of the pandemic. And all of a sudden, banks are putting more money into the reverse repo facility than they ever have before, at 0% interest, it should be noted. And of course, the real rate, when you factor in inflation, makes it negative. So the question is, why are 40 to 50 institutions storing almost $500 billion of cash in this reverse repo facility for a negative return overnight? Joining us now is Christian Muller-Gleesman, Managing Director of Portfolio Strategy and Asset Allocation at Goldman Sachs. Would you allocate your assets to this right now, Christian? And I guess really the more important question is, what does this mean?
Yeah, no, I mean, as you know, like at the margin, you know, cash is not a particularly interesting asset, as you were saying, when you have rising inflation. But the funny thing is, it's a relatively safe.
Well, as you can see, nothing so simple. We have to cancel, so please cancel your order because it's moved lower already, and we didn't manage to
as part of their business.
Seal this order, okay? Order to sell short cancelled.
The type of risk.
Stay safe, guys, and we will see. We will pay close attention to euro, and we will place order
we are currently
later on. Okay?
Hang on, Christian. Hang on 1 second. Wasn't that the case 2 weeks ago, 3 weeks ago, 1 month ago, 2 months ago? I mean, what has changed to drive all of a sudden from nothing to 500 billion into the reverse repo facility in the span of, a couple days?
Yeah, no, I think, listen, I think it has probably to do with lack of alternatives like T-bill issuance, etc. But to be honest, I think at the margin, yeah, it is just one of these anomalies which the Fed will have to react to, and at the margin kind of adjust their policies to kind of create a bit of normalization.
Christian, for those, I mean, I'm sure everybody knows, but, just a quick reminder that a reverse repo is basically the short-term agreement to buy securities in order to sell them back at a slightly higher price. When you look at regions, Christian, where do you find the most value? So is it these, is it thanks to the ECB Europe, where you could actually pick something up for a good deal, or is it the Fed just because, or in the US because the economy is stronger?
Yeah, at the margin, if we look at the kind of broader reflationary theme, I think it is shifting a bit with regards to kind of growth towards Europe. And I think we've seen recent rates market in Europe kind of pushing higher, whereas US yields have been a bit more range bound, at least in the back end. And at the margin, that theme is likely to continue in our view. We're still very bullish on Europe and European growth. And we do think that a lot of cross-asset opportunities exist in FX and equities, and to some extent in bonds. But I think what the US obviously has going for itself is that type of inflation momentum you currently have. I think you do actually see inflation continue to creep higher. You do see inflation continue to surprise to the upside. And at the margin, that might eventually drive some type of rates volatility. And I think that's the key concern we have with investors currently, that there is some type of delayed reaction from the Fed or delayed acknowledgement that inflation overshoot will have to be dealt with in a more aggressive way. Because as of now, if you look at the Fed pricing, it is more hawkish than what our economists expect, but it is still in line with a more dovish type of Fed rate hike cycle, whereas increasingly a lot of clients we speak to are worried about the need for the Fed to tighten faster and in terms of magnitude much more than maybe in previous cycles.
Is that going to bring back volatility, Christian?
I think so. I mean, like, you're definitely right that the big discussion in the last few days has been the settling of the VIX. The VIX is finally coming back towards lower levels, and it came alongside a settling of rates volatility. Because if you look since the beginning of the year, most of the volatility in equities hasn't been due to growth, because growth has been amazing. It has been due to rates, where I think secular growth stocks have been incredibly volatile, but also the whole equity valuation discussion has been a bit of a drag for equities, because higher rates obviously push down the equity risk premium. So I think this rates volatility has definitely been the key driver of keeping the kind of VIX a bit elevated. We talked about this before, you might remember, with the concept of equity duration. So I think that was the driver of equity volatility. That's settled in the last 2 weeks. Like, if you look at like implied rates volatility for 10-year rates, that's been ticking down. But I would argue, to your point, that it's a bit too early to completely fade the prospect of rates volatility. And similarly, in that regard, to expect the VIX to kind of break through the 16 level. I think based on our macro model, the VIX is perfectly in line with macro variables currently. So I think to have it going lower would really create a bit of an opportunity to lean against that, I would say.
Interesting. Christian, thank you so much, as ever, for your insights. Christian Müller-Gleesman, Managing Director of Portfolio Strategy and Asset Allocation at Goldman Sachs. Now, later today, don't miss our coverage of the Bloomberg Deal Summit. Executives, investors, and insiders will share their insight on the boom in M&A at this virtual event. It starts at 9 a.m. New York time. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kelly Lyons in New York. Now, coming up shortly, we'll talk Apple with Richard Windsor, founder of Radio Free Mobile. We'll have a lot to say, of course, about the developers conference and some of the extra security that they've attached to future features. This is Bloomberg.
We've sadly lost 12,000 premises across the sector as a whole. We lost about 330,000 additional staff in terms of headcount through the pandemic. It is a gradual road to recovery, but I am feeling much more optimistic. The positive response we've seen from consumers in returning to eating and drinking out, even outside, has been very welcome. And of course, we're not out of the woods yet, because we know that about 20% will struggle to reopen with social distancing restrictions, and every day that they are closed makes it less likely that they'll be able to reopen. So I think you will see continued business failures within hospitality over the course of the next year. Well, I think the government support has been unprecedented. Equally unprecedented is the hit that hospitality has taken. So we do need the government to look at a solution on rents. which is going to be critical to recovery, a recapitalization strategy to tackle the levels of debt that these businesses are going to come out of the pandemic with. So this government support, fantastic, has allowed us to maintain a large number of staff that we would have undoubtedly lost along the way had we not had furlough. But furlough actually is costing the businesses to implement at the moment, and the costs of staying closed, the industry is burning through £500 million a month in ongoing costs.
Curtain will rise again.
Broadway's returning June.
Have you bought tickets?
It's busted out.
You've got more time here. If you want.
Commodities are up.
Keep going.
To the moon.
No. Beautiful.
Bloomberg Surveillance. Weekday mornings on Bloomberg Television and Radio.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Well, this is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now, there's quite a lot going on in the markets, Matt, but it is a little bit quieter out there. So we're looking at, of course, the fact that the FBI was able to claw back the ransom that they paid for the cyber attack on Continental, and then a couple of other stories that really caught our attention, including the repo that you were talking about earlier.
Yeah, I mean, I think there's a lot going on, really, with question marks. You've got especially the Alzheimer's drug, which is, you know, so many people are affected by this horrible disease that we need to find a cure or at least some treatment that really helps. And I think that's the optimism in that stock. We saw it jump, I think, 65% yesterday. Biogen did, closed up 38%. We'll be watching it today as well. But there are question marks around what's going on with Bitcoin. There are question marks around the G7 tax agreement. Can that ever get past even a U.S. Congress, let alone the rest of the world? So there's a lot up in the air.
There is a lot up in the air. I don't know how it's playing out on the markets, Kelly, because, of course, the other factor is the variance and inflation.
So many things that the market has to balance and consider, Francine. Where that leaves us, though, is actually right around record highs on both sides of the Atlantic. We are at a record high on the stock 600 in Europe. It continues to inch higher, up about 0.4% today. And here in the U.S., futures starting to gain a footing. We're up about 5 points on S&P E-minis. Right now sitting at 42.30, which would be a record high if this holds come the opening bell in about 4 hours' time. In the bond market, not a lot of action. We are seeing yields moving lower by about a basis point, 1.55%, which is the lowest on the 10-year yield since back in late April. And then, of course, Matt, you were talking about Bitcoin, whether or not it's related to the Department of Justice recouping some of that money from the Colonial Pipeline ransomware attack, or whatever the cause of it is. Bitcoin is down about 5%. Right now, we're sitting at a 32 handle, $32,000 on Bitcoin, which is the lowest since January. And no surprise, that is dragging on some crypto-tied stocks and pre-market trading. Coinbase down about 2%. But some stocks moving to the upside include those Reddit trader favorites. Wendy's now, the fast food chain, getting a mention on the Wall Street Bets Forum. And as a result, up about 8.4%. I know you're thinking about a potential Frosty, Matt Miller, and then maybe some popcorn as well. AMC up 4.5%, GameStop by about 3.5% in early hours, Matt.
Can I just tell you, Wendy's was founded in the great state of Ohio, the capital city of Columbus. And I, as a kid growing up, I would go to the first Wendy's #1 all the time on Broad Street.
The OG.
Definitely the double bacon cheeseburger for me. Frosty for sure. And dipping your fries in Frosties is really a pro tip. All right, I have a terminal here. I have a chart here that shows, for our listeners on radio, I'll walk you through it, but you already know what I'm about to show you. Commodity prices have just been soaring. This is the Bloomberg Commodities Spot Index, and the chart goes back to the early 2000s. What we can see is we've now risen to a level eclipsing everything in the past decade. So we're at a 10-year high in terms of commodities prices. We talk so much about the chip shortage when we're talking about building cars as well as Apple products, for example. But don't forget, there's a lot of commodities that go into these things as well. So those prices, Fran, have to go up if a company like Apple wants to pad its margins?
I mean, it certainly, and you know, the whole story about margins and Amazon and whether they'll even make that threshold for tax is one of the big things that we're watching out for. In the meantime, Apple gave a preview of its next iPhone operating system at its annual Worldwide Developers Conference. It includes new features for iMessage, Photos, Digital Wallet, Maps, and Notifications. Now, the Apple chief executive, Tim Cook, spoke at the event.
We've continued to look for ways to help cultivate the next generation of developers, with an emphasis on those underrepresented in technology. We host entrepreneur camps for Black and female developers to foster the talents of future industry leaders. Our developer academies, including the newest in Detroit, prepare the coders of tomorrow with valuable tools and training.
Well, joining us now is Richard Windsor, founder at Radio Free Mobile. Richard, we'll get to the developers conference in a second, but actually, how much does this tax agreement change everything for some of these big companies? Share prices barely moved, so I don't know whether they think it won't happen or it'll just be postponed by so much that it won't really make a difference to revenue.
Well, I think if you look at the agreements that has been agreed on over the last couple of days, if it's as it stands today, it's not going to change an awful amount. Take the worst case scenario, let's just say Ireland. This is clearly aimed at Ireland with its tax rate, I think, of 12.3%. Worst case scenario, Ireland has to jack its tax rate up to 15%, bullied by the rest of the G7. And it's not going to make an enormous amount of difference. What I think, where the risk I think for the big companies lies, is that this becomes a baseline, and the actual baseline isn't 15%. Let's say it's 25%, and then you've got a significant hit. But the higher you raise the tax rate, the agreed on tax rate, the more and more difficult it is. You're going to be able to get it past the various parliaments that would have to ratify it.
So is there anyone, if you look, for example, at an Amazon, right, would it even qualify? I know they're still trying to work on the proposal, but would they qualify for that tax? Or are they just not making enough money in terms of revenue in certain countries to qualify for that?
Amazon doesn't make enough profit globally. Certainly, I mean, if you look at it, its international operations is much less profitable than its US-based operation. And so from that perspective, it will be some time before it gets up to a level where it may actually have to start paying some tax. So, again, net at the moment, you've still got an awful amount of uncertainty on this. It still has to be agreed formally. So I think there's a long way to travel on this story.
In terms of products, Richard, were there any game-changing announcements at the Worldwide Developers Conference? Is there any reason I'm going to have to sell everything I own and buy immediately the new iPhone or the new Apple Watch or whatever new goodie they've come out with?
Well, of course, that's exactly what Apple wants you to do, and that's what their announcements is really geared towards. However, if you look at what they actually talked about, Apple is taking absolutely no risks at the moment, and it's totally understandable. They've got this massive juggernaut of a business churning out hardware, and what they basically do is they make tiny improvements, have a look, see what the impact is, and then move it slightly more. But two things that I thought stood out particularly. First one is that now when you take your iPad and you put it next to your Mac, you can actually use your mouse and keyboard from the Mac with the iPad. Now, what that is, it's a sign that Apple is thinking about merging all of that together, and then perhaps the tablet eventually basically just becomes a touch-based laptop. That was one thing. The other thing I thought was particularly interesting was in the smart home, where Apple is now allowing the Siri digital assistant to be present on devices made by other manufacturers. That's very telling because what it implies is that Apple puts no value on Siri at all in terms of its differentiation.
Me either. I value Siri at 0. Richard, what about the App Store? If I open my own store, as an American, I feel like I have a right to decide, what stuff I sell in the store and how much margin I want to charge. However, in this case, it seems that some in the Justice Department may think that the App Store is too important to life as we know it. What's your take?
Certainly wouldn't go that far. But I think the human race has been around for about 3 million years before the App Store actually existed. So I wouldn't go quite that far. But from the perspective of the size of the app economy, it is obviously gigantic. And so there are concerns out there in terms of how much Apple is dominating and potentially manipulating such an enormous economy on which so many people depend for their livelihood. The big question mark, I think, that will move the narrative, I think, on this is what is the outcome of the trial between Epic Games and Apple? What does the judge come down with in terms of his ruling? And I think that will have a big influence on this situation. No knowing exactly when that's going to come, hopefully sometime in the next couple of months.
So if we boil this all down to an investment thesis, Richard, if Matt Miller isn't selling everything he owns to buy a new Apple Watch, should he sell everything he owns to buy Apple shares here?
From my perspective, absolutely not. I think what Apple is doing is they're keeping ahead of the competition, they're catching up with the competition where they've been a bit behind, but then the company's not doing anything radical. Now that means it's at risk in the long term of being disrupted when there's a huge change in the market, but there's no sign of that for some time. Now then, if you then take that and you look at Apple's valuation, I would argue that it's, that's pretty much fully priced in terms of the shares. And frankly, I would prefer to look elsewhere, like Alibaba, for example, which is a stock that I do personally own, where I think that the Chinese regulators hammered it far harder. The share price has been hammered far harder than the regulator has actually hurt the company.
Richard, thank you. Richard Windsor, their founder at Radio Free Mobile. Now, we'll have a lot more, of course, on some of these tech companies, Apple and Amazon. Now, also game changer for Alzheimer's drug. Well, a U.S. regulator or U.S. regulators give the nod to Biogen's controversial therapy, the first new Alzheimer's drug in 20 years. More on that breakthrough next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kaylee Lyons in New York. Now, it's a major shakeup in the pharmaceutical world. The approval of Biogen's Alzheimer's drug has driven shares of many companies higher. It's the first new drug that is purported to combat the disease in 20 years. But the FDA has accelerated approval even though the testing was controversial and didn't look terribly successful, according to our Bloomberg opinion columnist. Let's get more from Bloomberg Intelligence analyst Sam Fazeli. He's the senior pharmaceutical analyst, but he also runs Bloomberg Intelligence for us in Europe. And Sam, I'm curious because I know, as so many people probably do, close friends and family afflicted by this awful disease. And my first feeling was one of incredible optimism when I saw this headline come through. And then I read about the testing and I felt really deflated and wondered why the FDA even approved this drug. What are your thoughts?
Good morning, Matt. So exactly the same feelings as you. You know, this should be a day that we should be celebrating the approval of a new drug for a devastating disease that very likely will touch many of us one way or another. But unfortunately, that's not the case. I think I'd really certainly hope that the FDA has done the right thing here. But looking at the data that we have seen and their own expert panel had seen, it does leave a lot of room for controversy, and you have to trawl through the data to find positive signals.
So what does that mean, Sam? That there will be investigations, that actually, for the moment, even if it's approved, there won't be prescribing it, or that governments won't pick up the tab?
I don't think it's possible to do that. When the gold standard regulator in the world, or one of the gold standard regulators in the world, approves the drug with such a broad label, I don't think insurance companies and doctors can refuse their patients. That's going to be the most interesting angle to see.
So what does this mean for other Alzheimer's drugs that are in the pipeline, Sam?
Given that the FDA's decision appears to have been heavily biased by the fact that the drug reduced the amount of this amyloid plaques in the brain, there are other drugs that do the same. Eli Lilly's had an incredible impact on that. Roche Pharmaceuticals has shown some data that points the same way, and they'll have more in a year's time. So if that's what it takes to get approval and some signal of efficacy, then this should lead to several other approvals.
And Max Neeson, of course, Bloomberg opinion writer, argues this is the problem, Sam, that now everyone's going to be funneling billions of dollars into trying to deal with amyloid plaques. And what if that's not the answer?
Yep, that's, you know, there will be another trial that's being done. There will be other companies that will report data. If there are major failures, I think the FDA will have to review, although all of these antibodies, these drugs, work slightly differently to each other. So you could always make that argument and say, oh, actually, no, the reason this failed was because of that. But if they all reduce amyloid significantly, just like the Biogen drug, and they fail to show a benefit, then you have some questions that will have to be raised to the FDA again.
Still a lot of question marks. Thank you so much, Bloomberg Intelligence Senior Pharmaceuticals Analyst Sam Fazeli. And don't forget, later today, our coverage of the Bloomberg Deal Summit will be coming up. Executives, investors, and insiders will share their insight on the boom in M&A at this virtual event. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We're waking up to a shortage of everything. We've had this global experience of this virus. So we've all been home for a year and a half, thinking about a better world. And when we come out of it, we're seeing constraints in the supply chain in shipping, in semiconductors, in lumber, in corn, and of course in the metals. But when you actually make the shift from hydrocarbon to an electrified world economy, the impact on copper and cobalt and other critical electrical metals is enormous.
Robert, price is another reason for us to be having this conversation. A ton of copper is trading at about $10,000 right now. Most miners want the price as high as possible, and some analysts foresee $15,000, even $20,000. But as I understand it, you see risks in such high prices. What are they?
First of all, the copper price hasn't moved. It's the United States dollar is failing against copper. So if you think that a Bitcoin or Ether is money, why isn't copper money? It's just priced in dollars. And so when governments go on an orgy of monetary creation, and I'm drinking the Kool-Aid that we're seeing, you know, we're seeing the white eyes of inflation coming, it's really that everything is priced in these pieces of paper that are no longer printed. It's an electronic ledger entry for the United States government. So since central banks have made money nearly free everywhere, you start seeing a rise in anything we need. And as a species, we desperately need these electrical metals if we're ever going to get off the hydrocarbon addiction.
All the same, people are spending dollars to buy the things made with those metals. If copper stays at 10 or rises to 15 or rises to 20, what happens? And why are those things not good?
Well, we get a very slow, in the mining industry, you could double the price of copper this afternoon. It won't materially change the amount of copper we can produce in the next decade. It would help a little bit at the margin. Most governments would just come forward and say, that's for me. You're here in my backyard, you're mining my copper, and you're taking it home. So the question of sustainability now has to be solved, because
you raised the resource nationalism question.
well, every hand phone is an NGO. It's got, you know, Apple's put a very good camera on the back of it. So there's no hiding anymore. The whole supply chain has to be audited. So when I was a kid and I grew up, you know, there was that paper on the back of the Corvette. It told you what it cost and all the options. Then there's a piece of paper coming that says how much global warming gas is produced per kilometer driven. The third piece of paper is going to say how much global warming gas was generated to make that car. And this is what the automakers are concerned about, is that the whole supply chain is going to be audited to the bottom. And that's going to change everything, including the financial markets, I might add.
That was Robert Friedland there, Ivanhoe Mines co-chair and co-founder, speaking exclusively with Bloomberg's Eric Schatzker. Now we're joined by Tom Keene, co-anchor of Bloomberg Surveillance. Tom, I know you're looking at Bitcoin, and you also have some great guests coming up.
Oh, we've got a real equity feel to the show. We start strong with Ben Laidler. He's been a bull. He'll reconfirm a bull. He's also looking at the Laidler Breakfast Index, which is different than the Lacroix Breakfast Index. The Lacroix Breakfast
Mine's
Index,
more continental.
Very continental and outrageously expensive, particularly the sconces that you have with your cappuccino. We'll also have with us David B. Stilton's breakfast is too early for Stilton. David Bianco, David Bianco of DWS with us as well with an equity overview. Much more on that, and also on Bitcoin. I think we lose perspective. Bitcoin, I look at logarithmically, like I'd look at any other investment. And when you take the y-axis to log on Bitcoin, it is not as nearly as advanced in price as the doom and gloom crew would say. It really flattens out beautifully. And going back a good 7 years, 8 years, it's shockingly on trend given going to logs. That's a really important distinction, Francine.
Yeah, it is, but I'm also interested, Tom, I mean, Matt Miller sent this great story out saying, look, the colonial hackers broke this fundamental Bitcoin rule, and I wonder whether it was traceable. It makes it also more accepted mainstream. So
that's the heart of the matter. We'll see what the governments do on that.
Yeah.
I mean, it's just a matter of time before the governments weigh in.
Tom, thank you. Tom Keene there, co-anchor of Bloomberg Surveillance. So now, we still have a day ahead of us, so we're watching a lot of things. Kaylee, what's on your radar?
Just coming up in a couple minutes, Francine, is MFIB, Small Business Optimism. That's at 6 a.m. Eastern Time. A really good read on what small businesses are dealing with. Of course, anything they say about hiring and wages is particularly interesting, and of course, how optimistic they are about the recovery. So that's what I'll be watching in about 5 minutes, but it obviously is a good read, especially ahead of that inflation report coming up on Thursday, and in hindsight from the jobs report on Friday, Matt.
You know, going back to the beginning of Tom's log chart, back then I gifted one of my co-anchors, Adam Johnson, a little bit of Bitcoin on air, and he accidentally showed the private key to the camera, so the Bitcoin was stolen in an instant. But otherwise, it's nearly impossible to hack a Bitcoin wallet. So my question remains, how did the feds get a hold of this Bitcoin? And I think that's a question on investors' minds as well, as you see Bitcoin down 5% to under $33,000 a piece.
Yeah, so I guess we'll also be watching that testimony, right, from the Colonial Pipeline chief executive. I don't know what Kaylee and I are getting for Christmas, but Bitcoin sounds nice, or even I think we have a couple of birthdays, Matt Miller, coming up. I don't know, how many Bitcoins can you now afford for your co-anchors?
Maybe by Christmas, I'll be able to afford it, yeah.
Yeah, maybe like 0.01 Bitcoin. But, you know, the fact that investigators could trace the untraceable and sees it might be undermining this.
No, it's all traceable. No.
Case, right?
This is the mistake. Right. It's all very, very traceable. It's public. It's public ledger.
Right, so that's what we've seen, and that's, you know, maybe the narrative changes around Bitcoin in the future. Coming up in the next hour, Ben Laidler, eToro Global Market Strategist. This is Bloomberg.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
We still think we're in a bull market. Obviously, we had a very horrific correction.
The bottom line, though, is we're getting a big spike in inflation.
The market's a little too complacent about the Fed not even talking about tapering.
It's going to be very, very hard for any central bank, frankly, to be more dovish than the Fed is.
It's hard for the Fed to maintain the degree of accommodation when the output gap is closing fairly rapidly.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowitz, and Tom Keene. Bloomberg Surveillance on radio, on television today. An eventful Tuesday. Romaine Bostic in for John Ferro. Matt Miller in for John Ferro. Romaine Bostic on the Sikorsky right now, scheduled to be with us. Matt Miller in from Germany, similar. And that is a good and beautiful thing. Lisa, I'm looking at the clear and present market action now. People want to own the 10-year yield, which is driving the yield lower.
The great unwind of longer-term inflation expectations. That is what we are seeing in markets, and that is what is pushing stock prices up to near record highs. There is a question of how long-lasting this trend will be, with a fierce and fiercening debate between the economics profession about whether the Fed is taking the right approach or whether it risks a policy error.
And something we heard yesterday, Lisa, and it really continues forward today, is the elegance of the 5-year inflation-adjusted yield. Well, lower 10-year yield, okay, that's great, but the 5-year real yield just won't budge, and it's a very elegant chart. It just doesn't want to move to a lesser negative number.
And how much is this counting in the Fed continuing its $120 billion of bond purchases for a longer period of time versus just a low inflationary environment? Yeah. It's just amazing to see how much of the recent issuance of the U.S. Debt sales the Federal Reserve has picked up.
Matt Miller, do your John Ferro imitation, if you would. You got to fix your tie like this and, move your hands around like Ferro does. We all miss him. But Matt, do your imitation here of what the ECB stands for. All of a sudden, the ECB is upon us.
Yeah, and the ECB is going to be incredibly interesting on Thursday. I don't say that very often, but not only are they expected to raise forecasts for both growth and inflation, but they may change their language around their inflation target, and that could be key because up until now, the target has been up to but less than, or close to but less than 2%, and they might drop the less than part of that, taking a cue from the Fed and looking to overshoot.
It is amazing, the moving parts right now, and of course there's a lot of other stories out of Washington, out of London as well, but we're really going to focus on the equity markets today. Ben Laidler with us in moments with eToro as well. Let me do the data right now, red and green on the screen. Matt Miller, jump in here on foreign exchange, and let's begin with Bitcoin as a currency alternative. Matt, 32,896. What is the crisis level in the Miller household right now on BitDog South?
I'm actually excited because if the Feds have found a way to crack a wallet, maybe they can get me into my lost Bitcoin. In all seriousness, I think, this is one of the reasons that the price has come down a little bit. People ignorant of how Bitcoin works are starting to learn that it's very traceable and it's easy for anyone to find out where it is. Now, getting it out of there is the problem.
Let's call it key support here at 32,000. Again, 29,000 was a memory from 10 days ago. In the real world, Brent crude 71.11, pretty much stasis around, but I really want to focus on the yield structure that Lisa and I talked about. Lisa, as well, you look at the World Bank.
Yeah, the World Bank is publishing its latest global economics report coming out at 9:30 a.m. Remember, back in January, they downgraded their expectation for global growth based on the fact that there were resurgences, flare-ups of the virus in various parts of the developing world. We continue to see those, and we continue to see a two-tier economy, developed markets getting far out ahead and not all on the same pace, while the developing world still struggles to get vaccinated and struggles to overcome the pandemic. How much will that feature into a slower potential growth? 10 a.m., this is interesting. We've got the April U.S. JOLTS job opening survey. This is a key leading indicator of just how quickly the jobs market is getting back on track. Of course, we've seen the openings rise much faster than the supply of workers to be able to come back in and take those jobs. And then 10 a.m., and I want to really get to this because it addresses something Matt Miller was talking about, Bitcoin, the fact that the Colonial Pipeline CEO is going to be testifying before a Senate committee. This comes after yesterday the government said that they had recouped about $2.3 million of the ransomware fee that Colonial paid to reopen its pipeline. Really throwing into focus, Matt said that the reason why the price was lower was because people were realizing that it's a traceable asset. Another reason why is because this might heighten regulatory scrutiny if this is the currency in which you end up doing a lot of these ransomwares or having some of this illicit behavior. There is a concern that this is really a tool for nefarious actions. And this sort of highlights
they should have just done it with dollars.
Well, I know, and this is the argument. I knew, Matt, that you would go back. But I will say this, not when you're doing it, though, intercontinentally, not when you're doing it digitally. And there is a question about regulatory scrutiny and what that means longer term for the prospects of the likes of Bitcoin. Tom.
We will see on that. Thank you. Lots to talk about this morning. Right now, Ben Laidler joins us with eToro. I do want to get to the equity markets, but Ben, I like how you take your way too healthy breakfast index and you're up 54% in the Laidler commodity household right now. Tell us about the breakfast index and how it folds over into the commodity call.
Well, commodities, outside of crypto, is the best performing asset class in the world this year, and I think it sort of continues to do well. You have this sort of perfect combination, at least of your bullish commodities, of still pretty tight supply and a lot of sort of disruption and underinvestment there, and obviously sort of growth just really rebounding. I mean, led by China, biggest importer in the world. Came out of the crisis sort of early, but now, as you were saying earlier, just really sort of broadening. You put those two things together, the whole commodity complex is doing well, and ag and the cost of your breakfast, frankly, regardless of what you choose to eat for breakfast, is booming, and I think that has a lot of sort of impacts, right? If you're a producer, that's if you're Deere, if you're the biggest equipment producer in the world, that's great. If you're a consumer, a lot of which is in EM, that's not so great, and more broadly, it just feeds this sort of narrative of which I think is overdone, but it feeds this narrative of sort of global inflation sort of running away from us here.
Yeah, Lisa, I looked at the footnotes, and the Laidler index is unfortunately way too healthy for me. It's got wheat in it, and oats and barley, and the rest of it. The Keen index, folks, after some careful research, it's weighted, and the Keen index includes Trix, Tang.
I was about to say, my Keen index would be Tang Mimosas to Bloody Marys.
Exactly.
That would be basically what I would imagine.
Ben,
please save us. There is a question going forward about what's driving the equity rally higher, and a lot of people point to the lower yield environment. The idea, people are getting used to this idea that perhaps the Fed is correct, that inflation will be transitory, and that we will go back to a low growth regime that is absolutely a Goldilocks scenario. At what point do these low yields actually undermine the argument for equities, because it really suggests that growth is not sufficient to sustain these kinds of earnings growth?
I think the earnings story and the growth story has a long way to run here. I mean, you were talking about vaccinations and things earlier on. I mean, global vaccination rate, 11-12%. Lockdown index, 50 globally relative to 0 pre-pandemic. So I think the sort of reopening has a long way to go. We're going to get World Bank talking about global GDP forecasts today with the OECD last week, dramatic increases to their forecasts. So I think that's the narrative. The world's going to keep reopening. These GDP forecasts are still too low, and that's just driving earnings. And, we talk a lot about bond yields and high valuations and, that's probably going to come down, and that's your risk. But I think the greatest insurance policy is earnings growth, and earnings growth just continues surprise on the upside. You're going to get maybe 40% earnings growth this year. I think that's sort of consensus. But look at next year. Next year, consensus says you're only going to get 10% earnings growth globally. Really? With 4.5%